Please read this disclaimer carefully before proceeding further. Alright traders, let's look at WNM patterns. My name is Vic. Thanks for joining me in this video. We are going to look at some of the secrets of WNM patterns. If you are aware of my work, if you follow me on social media like YouTube or Instagram and TradingView, then you know that most of my trading decisions are actually based on WNM patterns. I use Fibonacci along with WNM patterns to have very high accuracy in the market. Okay, so let's look at WNM patterns. Now WNM patterns are basically consolidation patterns, but there can be few different variations of them. They can be elongated, they can be like an overstretched patterns as well. What I mean by that is this is a pattern which is looking like a normal looking W pattern, but there can be few variations to a W pattern, which is like this. So as you can see, this has overstretched to the one side. Now another variation that we can have is something like this, where the midpoint has gone much deeper, and then we have little retracement, and then we have even further overstretch onto the other side. So all of them are actually W patterns, and they can be like different variations based on like how these legs line up with each other. But never trade this one, because this is not a W pattern. And the reason behind that is that midpoint of a W pattern or an M pattern needs to be inside the previous impulse. This is a valid W pattern, this is a valid W pattern, this is a valid one. However, this is not a valid W pattern. Now another one that we can see is something like this. Now this is also not a valid W pattern, because what we can see that market has created this midpoint, but midpoint has not been violated. Ideally the last leg should come inside the previous leg of this, and it must violate the midpoint. So if we see that it hasn't actually done so like this, then this is not a valid W pattern. So only W patterns which are valid are like this one, and this one. Similarly, an example of M pattern will be like this. That's a normal one, and we have little weird looking ones which we can call them as overstretched M patterns. There's another one that we can draw. This is overstretched on the other side. Now why do we trade only these ones? It's because the Fibonacci ratios which are aligned in this W pattern or in this M pattern is far superior than the ones which are elongated onto other side. Now we cannot say like that these are not tradable. These are tradable, but they will not have that kind of accuracy, and they will not have that kind of probability in our favor. So the best ones are the ones which actually look like your own way of writing W. So this is how we usually write a W, right? So if a pattern looks like this, that means you're looking at a good one which you can trade. Because remember, anything that is in the nature which is looking good, which looks a little beautiful, usually has better Fibonacci ratios behind it. So better Fibonacci ratios mean better reward to risk ratio, better probabilities, and better chances of success. So we are going to look at some of the examples, and as we go along we'll look at how we could have actually traded them. So I'm looking at actually currently monthly time frame on Euro USD. Now WNM patterns appear on all time frames. You can actually spot them on even tick chart, 1 second chart, 5 second chart, 1 minute chart. Obviously as you go down to the lower time frame, you'll have a lot more noise, but they appear on every time frame and you can trade them in exactly the same way. So let's look at some of the W patterns or M patterns which are available on monthly time frame on Euro USD. As we can see that market has actually created an impulse around here. Then we have a retracement. Then we have another correction on that, and then market completed around here. This obviously has closed inside the previous leg and it has violated the midpoint. That means it is a valid M pattern which we can trade. Now at the end of the M pattern, market goes up, and that's why the price has been moving higher. So that's how it is. Now one of the important things to note here is actually like a kind of like a secret as well, which is that if you can spot an M pattern, then you will definitely be able to spot a W pattern at the same time. And if you can spot a W pattern, you will find M pattern almost right in the same proximity. Now if you look at this leg right here, if I zoom in a little bit, you can see that market fell down. Then in this candle it started to move higher, and in the next candle it went back down, and then it started to move again higher. And this is what we call as a W pattern. This is a valid W pattern which can be traded. So a W pattern is actually embedded inside a bigger M pattern, and that's how we spot them. Now once you have spotted them, there is high chance that you will be able to spot a lot of them in the same proximity. So let's say if you can spot any other. Can you spot any other WRM pattern around here? Let's give it a few seconds for you to try to spot a WRM pattern here. Have you spotted so far? Right. This is the leg down, and then we have a retracement upwards. Then market fell back down, then started to move higher, and that has created a nice looking W pattern which can be traded. When W pattern completes, the market falls down. When M pattern completes, this M pattern completed here, the market is supposed to go higher. When W pattern completes, the market is supposed to go down. And we can trade all of these opportunities right there. So in this zone alone, we had three amazing opportunities where we could have actually traded. One was when the market finished the W pattern here, we knew that it was going to come down, so we could have taken a short here. Then when it went to this leg, this point, and completed the entire M pattern, we knew that market was going to go up, so we could have taken a long. Then market completed a W pattern, that means it was supposed to go down, then we could have shorted again. Now can you spot any other? There is another one which is right there. The market started to fall back down, and then this leg completed inside the previous one. That means it is a valid M pattern. So when we were short from here, we could have actually reversed our position to long, and we could have gone long from here. Now there is another one which you can probably spot here, is this one. The market started to move higher and then fell back down, and then created another W pattern. So when we were long from here, we could have actually taken our profits, and then on the completion of the W pattern, we could have taken the short. So this is how we can actually spot W&M patterns. Now this is obviously a monthly time frame, and we are not going to be executing on monthly time frame. Let's look at some of the examples which are present on lower time frame. Now one of the trade idea that I posted in recent time is a short from this level, and we have been in that short, and we are still in that short position. So how do we plan something like that? Now if I go to the daily time frame of Euro USD, what I can spot here is that market has been creating a W pattern right there. This is the move down, then we have move up, then we have move down, and then we have move up like this. Now how do we find out whether a W pattern or M pattern is actually completing, what is the point where it is going to complete? That has little complex Fibonacci rules behind that, and it's part of my course as well. But from the basics point of view, what you can do is draw Fibonacci on the previous leg, and then you can see that market is probably going to come to one of these major Fibonacci levels, like 78.6 or 88.6 or 61.8. This one came to 88.6, and that's why it started to fall back down. So this was our area where we were looking for a short position right here. So that is how we found this opportunity, and we have been able to take a short position. Now, to take a short position, you obviously need some kind of entry mechanism. So if you're looking at candlestick patterns, or you're looking at some kind of indicator like water indicator, or if you're looking at trend lines or moving averages, anything which actually works for you is good enough for you to take an entry right there. And in terms of the profit target, it needs to be at least 1-to-1, obviously. So if the zone is like this, then you need to look at somewhere around here you could have taken the profit target. So there are other Fibonacci rules which can actually extend your profit targets, and in some cases you can draw the Fibonacci on this leg or this entire leg to assess where your profit targets is going to be. Now, one of the things that is very important for WNM patterns is that all of these patterns actually provide multiple opportunities for us to trade. Now, if you are aware of ABC pattern, which is basically simple as this: there is an impulse, then market moves higher, and this is point 1, this is 2, 3, or we can call it ABC, and then market started to move back down. And as soon as it actually breaks this level, this structure, the previous structure, then we can actually start to go short on this market. Now we can also do the same thing if you are trading an M pattern. M pattern is no different, it's exactly the same. It is actually the same pattern as ABC or 1, 2, 3 pattern, but with an additional leg to it. And this additional leg is actually better than trading just 1, 2, 3 or ABC pattern, because as I just mentioned, you can draw Fibonacci on this, and then you look for a major Fibonacci level to take the profits. So in this particular case, the market has come to 61.8. Now this point has to break through this to collect our profits, right? Because we are going short on the break of this structure. We are breaking through this support to take our profits on the short, right? So what we need to do is we need to look for another Fibonacci level which is after 61.8. So you should be looking to take profits either at 78.6. If that is broken also, then you can extend your profit targets to next level, which is 88.6, and you can keep on going. You can keep on traversing your Fibonacci levels like this, and you can maximize your profit targets. So that's one way of actually doing this. However, whenever you spot that your M pattern is probably coming to an end, when market starts to move higher a little bit, that's when you can take the profits of your short profit, and then you can reverse your position to go long. Now when you start to go long, most probably it is going to form another kind of W pattern like this. So again the process repeats. We are going to take another long position here on the break of this midpoint, and then we'll collect our profits. So that's how it keeps on going. Let's look at another example, which is actually on GBP USD, and this is another trade that I posted very recently. Now if I look at this particular point, what we can see that market has been creating a structure like this. So if you know how to draw impulse and correction in the correct way, this is how it is going to be. So we have impulse, correction, then we have impulse, then we have correction, then we have impulse here, and then we have a correction right there. So as you can see that market is probably going to create a complex W pattern or a multiple W patterns. You can already spot that we have a W pattern in the making right now. So if this level is broken, if this structure level is broken, then we can look for a long entry going into either into this structure level, or we can draw Fibonacci on this entire leg and then we can see that it is probably going to coincide with the major Fibonacci level, which is 78.6. So we are going to take profits, long profits from there, and then we can reverse our position based on our entry confirmation, and we can go short to take our profits. So how we can draw the W pattern is something like this. This is going to be a little weird looking W pattern when it completes. This is how it is going to be. Now, so each W pattern has two opportunities. One is to go long, as W pattern while creation, when it is actually forming, it is actually a bullish event. When it completes, it is a bearish event. Market goes down when a W pattern completes, but market is going up when W pattern is forming. Similarly, if you have an M pattern, let's spot an M pattern here. We have an M pattern right there. We have an impulse, then we have a correction, then we have an impulse, correction on the correction, and then we see that W is right there, M is right there. And if we draw Fibonacci on the previous leg, we can see that it has come to 50%, then it came down to near about 78.6, then it came to 88.6, and then when the W pattern completed here, it started to move higher. When it completed here, started to move higher. Now this is a little complex example because multiple M patterns were getting completed, but you can easily see that once the midpoint of this M pattern was broken, you could have actually taken a short position. Right? If you're a day trader, then you could have actually taken a short position on the completion of this candle, or on the retest. You can see that little wick right there. So on the retest of this thing, you could have taken a short. Similarly, when the market came here, when the M pattern was completed, we could have actually gone long, and that is right there, and that's my profit level. So if you have been following me on TradingView or YouTube, then you might have noticed me pointing this zone as a zone for me to go long, and it has reached its first profit target, which actually coincides with the previous structure right there. And now we are waiting for this structure to be broken so that we can go further long. If this structure is not broken, then it is quite possible that it will come back down, but we can see that M pattern is so easy to spot that we could actually go long from here and take our profits. So now another entry method, or another way of trading W&M patterns, is actually using the trend lines. What we can do is, of course, we can spot a W pattern right there as well. Let me just quickly remove this and draw a W pattern for you. So we have a W pattern here. This is the midpoint. Then market fell back down and then started to move higher. Right, now in this case the W pattern was actually completed, that's why it fell down, but there is an elongated W pattern as well, which actually completed right there. Now let's look at this one first. So what we do here is that we can actually draw a trend line from the previous high and connect that with the midpoint right there. And as soon as it actually starts to break, the market starts to break this trend line and go higher, we can actually take a long position. And you could in this particular case, you could have actually held to that long position all the way to here if you know how to use the active trade management, if you know how to trail the stop loss based on some kind of structured rules behind it. Otherwise, you could have actually gone to the lower time frame right there to find a better opportunity to go in. You could have actually gone to this level, which is 4 hour, or whatever level you want to go to. If you want to use 8 hour, that's also fine, whatever works for you. Now here we can see that this is our actually the zone that we were looking for, and this is our trend line. So price was trying to stay in and below this trend line. So this is something like this. Now this is obviously the first candle which has actually come out, and this is where we could have actually entered the trade. So this is how we can trade W&M patterns. These are highly probable, highly profitable, and quantifiable patterns. To quantify W&M patterns, what we do is we make use of Fibonacci. Fibonacci is the guidance mechanism that helps us to understand where the W pattern is actually forming, and whether it is what kind of success probability it has, and where it's going to have like stop, profit targets, and entry level. So all can be decided based on the Fibonacci and Fibonacci confluence pattern strategy. Right, so hopefully this has been useful to you. If you found this useful, informational, do not forget to hit the like button, and in the comment section let me know if you have any kind of queries, any kind of comments or suggestions or feedback about this video. I'll be happy to answer them. I'll see you in the next video then. Thank you for watching. Find and follow us on these social media channels.